This video is for anybody who is looking to have an income type portfolio that is a Bitcoiner or MSTR shareholder in Canada specifically. And I'm going to be talking about why in Canada, because many of us probably are familiar with MSTY, which is a yield max product, but it's available in the States. And it becomes pretty tax inefficient as a Canadian to hold that, especially when we have a tax-free savings account, which we can hold investments in. So I'm going to be talking about the TFSA, the tax-free savings account. I'm going to be talking about two different products, mainly one, which again has the same ticker symbol, MSTY, but it's by Harvest and it's on the Toronto Stock Exchange. And I'm going to be showing examples of how somebody could use this to either supplement or to completely replace their income, how sustainable it is, and we'll get into all the examples and everything like that. Before we do, my name is Forrest Hodel. I'm on X and Nostr, and I'm a Bitcoin educator, and I do one-on-one Bitcoin coaching for all of your security needs and any questions you might have. A link for that in the description. So this here is the Harvest Portfolios website. Let's get into exactly what this is, the MSTY ETF is, and I'll get into some of the examples after that. So MSTY holds the underlying MSTR shares, unlike the MSTY in the States. It has a fixed distribution rate, which makes it useful for income generation as well, so you know exactly how much you're going to get, at 40 cents per share. This is its net asset value, which can occasionally decouple based on how quick they are to adjust the underlying. And this is the market close share price right now, $9.27 Canadian. They have 60 million in assets under management, and it's Canadian unhedged, which means that you get, first off, you're exposed to a US stock, and that's always going to be relating that back to its Canadian dollar value. So if the Canadian dollar, which historically it has, goes down against the US dollar, you're going to benefit from holding a product like this because it isn't hedged to the Canadian dollar. It isn't offset by the currency exchanges. So here's some advantages. So US stock, basically why I explained that or how I explained it. High monthly income, Canadian trust unit, tax efficient, lower purchase price than the than MSTR, and Bitcoin proxy with high monthly income in Canadian dollars. You can see here that there's only two distributions so far. So this is a relatively new ETF. So there is some inherent risk with how new it is. And this right here is super important. So portfolio breakdown. So they hold 101.2% in strategy. So they're aiming for 100%. It looks like they've taken on a little bit of debt to balance that. So right now they're a little offside of their goal, and they have cash and cash equivalents and market value of options. So they have some options as well. So when it's in brackets here, that's actually negative. So what they're doing is right here, this breakdown. It says the ETF seeks to provide unit holders with long-term capital appreciation through purchasing and holding common stock of MSTR and generating high monthly cash distributions through an active covered call writing strategy. So that is how they generate yield. A lot of you guys are probably not experts in options. So we'll talk about that a little bit. They have an expense ratio of 0.4%, which is, higher than an index fund, but it's actually relatively low for an active yield product like this one. So again, let's talk about the fund focus here. So they provides access to the growth potential of MicroStrategy or strategy. They need to update this, and overlays an active covered call writing strategy on up to 50% of the position to provide high monthly cash distributions to its unit holders. So they only write calls on 50% of the options. So say there's a huge upside and all of their calls expire in the money, they will end up, selling those shares to the contract holders of the options and then buying back in. But they've essentially capped their upside on 50% of the holdings. So you're still exposed to the price appreciation of strategy, but it's going to be muted to the upside. and you're being paid out regularly instead of that potentially getting reinvested. Now, with it being a fixed rate of 0.4%, unlike the MSTY in the States, there might be some return on capital, there might not be, and when there isn't, that's getting reinvested into the fund automatically because they have a fixed rate of distribution, whereas the other one is a lot more fluctuating, and they're intentionally trying to keep the price low in that case. I'll explain the options just a touch more before we get into, first off, its performance historically compared to MSTR, compared to Bitcoin, and some strategies for this. So options are basically a contract that you can create if you own 100 shares of an underlying equity. Now, the problem with owning 100 shares of MSTR is that's going to cost you $30,000 US, which is pretty expensive. So it might be out of reach to some people. And then you're writing, that's only for one contract. And if that contract ends up, you write it wrong, you're not an expert at it, or even if you're doing a good job, but it still gets called away because there's a percentage likelihood that it will, depending on what you're selling. Then those shares have been taken away from you, and you either need to wait to buy back in at the same price or lower or whatever, but you're kind of out of the market if you only have one contract or 100 shares. So it's a little bit limiting, and that's why one of the advantages that they showed was lower purchase price. The other thing here too is these are actively managed. So that means that professionals, people who know the markets, people that understand covered calls, strategies, and understand these funds will be doing the work for you, and you're essentially paying them that 0.4% fee to do the work for you. So here we have the MSTY on the chart here. You can see it had an initial price of $12.52, peaked and went down to where it's trading at now, which is actually $10 on this chart here. And that's maybe the overnight trading. There's a big discrepancy between buy and sell. So the data is slightly off. This is a fairly illiquid and small fund, so there isn't going to be a lot of up-to-date information with something like this currently. So 2 distributions paid, both 40 cents. And both each month. So say you buy these shares at around $10, your cost basis is $10, it's paying out 40 cents per month per share, you're getting 4% return per month, which is incredibly high. It's incredibly high, but you have to understand that the reason that it's so high is because of the volatility of MSTR. MSTR is one of the most volatile stocks in the US stock market. And that means there's a lot of premium on selling covered calls. So there's a lot of money that you can make from selling covered calls. Now, let's take a look at MSTR and actually compare MSTY and see what the price is like on that. So if we look here at MSTR, which is the candlestick pattern, and then there's this sort of magenta line pattern behind, that's MSTY. MSTR, since inception of MSTY, this is roughly, this is just kind of a rough chart that I did here. MSTY has performed negative 16.5, where MSTR has performed negative 12.9. So MSTR has done better by around 3.5%. So that's fairly typical for a fund like this to underperform the underlying because you're actually extracting value out of it, you're capping the upside, and you're paying an expense ratio. So there's some additional stuff within there, but it's giving you regular income without you having to think about it or sell the actual stock itself. So again, you're taking a managed approach to this and potentially setting it and forgetting it. Now let's compare this to IBIT, which is the Bitcoin trust. So this is basically following Bitcoin's price, and you can actually see in this exact time frame, IBIT has done negative 18%, where MSTY has done negative 16. So MSTY has actually outperformed Bitcoin in this very select period. So in my opinion, MSTY, because it's going to underperform MSTR, have less volatility than MSTR, it's going to perform potentially similar to Bitcoin itself. but be this sort of proxy derivative ETF. So there's that. All right, so now let's talk some strategies. So in Canada here, if you're buying something like this, you might want to hold it, right? None of this is financial advice. None of this is advice at all. This is just an experiment and an example. So if you held it in a TFSA, if you were 18 years old and at 2009 when the TFSA was created, you would have a contribution amount. You could contribute to your TFSA upwards of 103,500, says ChatGPT. So let's just round that down a little bit to 100,000, give us a nice even number to calculate some things from. And of course, this is going to go to whatever amount you actually have. Now, what's interesting about a tax-free savings account is anything you earn in there, like if you were to trade, not necessarily trade, you're not supposed to use a TFSA for trading. If you do, then it won't become tax-free because it becomes sort of like a business activity and there's no direct example of what they tell you. They can just like decide that based on your activity within there. So it's best not to do any day trading, swing trading, anything like that. But with MSTY, you wouldn't be doing that. You would just buy it, right? And the dividends from that are just like normal dividends, and those are tax-free. And you can set up with your brokerage, you can automatically or you can intentionally withdraw any amount from a TFSA, and actually you can withdraw more than than what you've contributed, and you can recontribute that every single year. There is limitations within the year. If you've taken, say you had 100,000 in there, say you took some of the principal amount out of that, your limit would already be there because you've contributed that total amount that year. You'd have to wait till the next year to recontribute that 20,000 you took out. So there is a little bit of things you need to think about there. But what's amazing about this strategy, again, you have $100,000 of MSTY in there. The dividends that it gives you, you can withdraw. That's not taxed at income. That is tax-free, as far as my understanding of it. Again, I'm not an accountant and I'm not your financial advisor or anything like that. So this is just going off of what I understand here. So maybe look a little deeper or think about it yourself. But let's see, and let's take an example here of the 100,000. You have not decided to diversify at all. You've decided to go all in on MSTY. How much per month will you be getting? So let's take an average price of MSTY at $10, which is definitely achievable as it's been trading below that. It's been trading above that. Let's say your cost basis is $10. Let's take a calculator here. If you have $100,000, you divide that by 10, that's going to give you 10,000 shares, and you times that by 0.4, which is the 40 cents per month. You're going to get $4,000 of dividends per month, and you times that by 12, that's $48,000 for a $100,000 investment. Potentially, my understanding is that wouldn't be deemed as income. That's just your profits from your TFSA that you're withdrawing from, and that's $48,000 extra dollars potentially that you could supplement your income for. And I mean, I know some folks that make less than that, so you could potentially live off that. Many of us, of course, are not going to have, $100,000 to invest, especially in one ETF like this. That's a lot of eggs in one basket. What if MSTR? What does it do? What does Bitcoin do? All of this kind of stuff, right? So let's say you have $10,000 to invest, right? Let's run those numbers. 10,000 divided by 10, which is the cost of the shares. That's going to give you 1,000 shares. Again, times by 0.4, which is 40 cents per month, an extra $400 a month. I'm sure we'd all like an extra $400 a month. Times that by 12, $4,800 a year extra, which would be great, right? So that is a potential option. Now, Harvest has also came out with a new product called MSTE. So here's MSTE. This is the same thing, but they have 122% of the holdings are MicroStrategy. So they've taken on roughly, their goal is to take on 25% debt. so that it's a leveraged form of MSTY. And it pays out a distribution of 60 cents instead of 40, but it also has a higher starting price. So let's take a look at that starting price, that a payment, and we'll see if it's better or worse. So divide by the market close here, which it says is 12.5 basically. So that's going to give us 8,000 shares, and you times that by 0.6, which gives you 4,800 a month. And you could times that by 12, which gives you 57,600. So you're getting more income. Even with the higher price, it is working out to more. And let's see how MSTE, now MSTE is even newer than MSTY. So let's see how it performs against MSTY, against everything else. Let's see if it does okay. So it has more leverage, which means more risk, which means more volatility. And in this case, since inception, has outperformed MSTY. It's up 2.15%, while MSTY is down 7.14%. So very, very small range of information that we have on MSTE. And let's take a look. I'm going to switch this one out to MSTE. And we're going to put the candlestick at MSTR. These jump all over the place. There's really not enough data to figure it out, but you can kind of see there's a lot of times where it underperforms, a lot of times where it overperforms, but it stays pretty in line as far as average, I would say, if we looked at the average of it. Now let's take a look at IBIT. Again, the same thing here. IBIT overperforming, underperforming drastically, underperforming like crazy, overperforming. I mean, it's just all over the place. So there's a lot of volatility within MSTE. If we look at the share price of MSTE, we can see from, peak to trough here, a 55% difference. So it went all the way up to 1706 and all the way down to 1102. So this is incredibly a lot of movement. The price is low, but the volatility is crazy. That's a huge price movement in percentage wise. So a lot of volatility in this one. Maybe it will appreciate similar over time as MSTR would, but paying you out because there's the additional debt. Now, in my opinion, MSTR is already leveraged. It already has debt. Adding more debt in something like this might be a little too much. And for me, I actually own MSTY. I haven't messed with MSTE. It has outperformed MSTY, but in my opinion, I don't care that much. I'm not splitting the hairs here. And I expect that if we do have a bear market of some kind, that MSTE will be hit significantly more than MSTY would. And the covered call strategy, although it doesn't outperform or doesn't save you in a bear market, it will sort of hedge, and at least you're getting something even though the asset is going down, because there's times of it going up even though overall it's going down. So there's a lot to consider here. There's a lot to think about. I think personally that this is a decent strategy. It's a way to get some extra income off of your investments. It's a way to perform fairly well as the ETF itself in its own price action, right? You might get price appreciation of the ETF plus the distributions. In my eyes, this is not too bad. It's pretty good, pretty good. So thanks everybody for watching. If you want to avoid all of this, if you want to just get yourself some pure, beautiful, self-sovereign Bitcoin, you might want to check out Bitcoin Well. It's where I buy all of my Bitcoin. They're a non-custodial exchange, which means when you send them dollars, they send you Bitcoin directly. And if you use my link in the description, you'll get some free Bitcoin on sign up. And they have non-KYC options available for Canadians. And if you want to preserve your seed phrase, I recommend checking out the Stampseed kit, which you can get 15% off with using my code BTC not crypto 15. Thanks everyone for watching.